You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry. We've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmeGroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO, This Week in Futures Options, a program where, as the name implies, you break down the week that was, and in many cases still is, from a futures options perspective, the other side of the fence. What's going on? Volatility, volume, open interest, hot strikes, unusual activity, who's paying the rent, all that fun stuff. We will break it down and more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you like TWIFO, we got a lot of great archives for you. Easiest place to find that, as well as our other 14 programs, theoptionsinsider.com. While you're there, maybe click around, read some articles. Got a lot of breaking news, education, analysis, all sorts of fun stuff up there. Of course, you can always follow us on all the social medias. And if you just want to mainline the radio straight into your ear holes, then, of course, iTunes, TuneIn, Stitcher, all those fun places, we got you covered there, as well as via our mobile app. And for the hardcore among you, can always join us live every Friday, 1:30 p.m. Central, via Mixlr. We welcome those of you who are hanging out in Vol Views and coming in now. Got a little ONR break there in between, but now we're back talking all things commodity volatility. By the way, you can follow the show along live, listen at Mixer. You can also generate those great free reports over there, cmegroup.com/TWIFO. So make sure you do that. If you are listening live, you should be over there as well, because Nick and his team turn on those reports for you. So actually, you can click into them and get a little bit more data than you usually can, so you can follow along exactly with what we're talking about here. They also work after the fact, too, but you can't get those extra live links there, which add a bit of cool to the mix. Speaking of Mr. Nick and his team, I'm joined by my cohort, my partner in all things futures options, Mr. Nick Howard from QuickStrike, a little platform we like to use around here quite a bit. Mr. Nick, welcome back to TWIFO, sir. It has been too long. I'm fired up. I'm ready to talk commodities.
Yeah, it's only been what we got, a week, but it feels like 2 weeks. Feels like 7 days. Only been a week, but it feels like 7 days. So let's get started.
It's been an eternity since I've talked commodity volatility with you, and also indexes. We're going to get into that as well. And helping us do that, holding down the CME Group hot seat this week. Appropriately enough, it's been a while since we had a CME Group guest in the CME Group hot seat. A lot of other people are vying for that privilege, but we got Tim McCourt, the global head of equity products over there at CME Group, joining us in the CME Group hot seat. Tim, welcome back to TWIFO, sir.
Great. Thanks, Mark. Good to be here. Hey, Nick. How's it going?
What's up, Tim?
Not much, man.
Well, Tim, we have you on. It's kind of a timely thing. We have you on this week because your division is what was making a lot of the headlines over there in the futures and futures options world this day, because after a long wait, people have wanted these products to kind of come back. They finally came back on Monday of this week. You guys, of course, I'm talking about the much-awaited, much-anticipated return of the Russell 2000 over there at CME. Of course, they've been around other places for a while, but now they're finally back over there on CME. So, Tim, this is your baby. This is your bailiwick. Walk us through a little bit why you guys decided to bring those products back, and what are you seeing out there this week?
Yeah, and it's actually a really exciting time, not only here at CME, but also for our customers and for all the listeners out there, where we're very excited to welcome the Russell 2000, the E-mini Russell 2000 future back to CME Group. We're excited to welcome it home. And as you had mentioned, this is something that's been kind of a long time coming. If everyone remembers, back in August of 2015, we first entered into our long-term partnership with FTSE Russell, the index provider, and on July 1st, our exclusive rights commenced for the Russell 2000, and we were happy to bring that product to market this week on Monday, July 10th. And it's been a great week. You know, we're super excited. We couldn't be more pleased with how the first week of trading has gone for futures and options. We've got a few hours left here today, but we're probably going to be a little over 23,000 contracts already traded in the Russell 2000 products for this week. We've had some EFP trades. We've had option trades in the quarterlies, the weeklies, the end of months, and we've had some BTIC trading, which are basis trade index at close, and the outright futures has been great. You know, it's been tight. It's been on screen. There's a good top of book and good liquidity for everyone to get in there and start trading the Russell futures again at CME. So it's been great. You know, open interest has been growing day by day. Right now, we're a little over 2,100 contracts of open interest. So overall, it's been a great first week for the product, and everyone's here excited, and the feedback from customers has been overwhelmingly positive, and everyone is super excited to see it come back home.
Interesting stuff there. You know, it has been a while, you're right, to see these looking at these numbers, because you're right, we don't get a chance really to talk indices too much here on TWIFO as well. So this is kind of fun for us, a nice little excuse to get some action out there and get to talk about these products. And they have been much awaited. You know, we talked a lot back on our previous show, Volatility Views. Pretty much all the talk has been about, you know, where is the vol going? One of the things that's so attractive about Russell, just inherently as an index versus something like the S&P and others, is, you know, all other things being equal, small caps should be inherently a little bit more volatile, should have a little bit more structural volatility going on out there. So, you know, most of the time, even if vol is low, your chances are you're going to get a little bit more bang for your buck out there in Russell land, which is a nice thing this day and age. Are you starting to hear some of that from the clients and customers you were talking to as you setting this up, Tim, that they're happy to see this product return, if for no other reason than maybe it gives them an opportunity to have a little bit more access to some structural volatility out there versus what's going on in the S&P right now?
Absolutely. And I think, Mark, to your point, when we're looking at the small cap sector of the U.S. economy, it's definitely unique from the large cap sector, or kind of what you find in the S&P, the NASDAQ, or the Dow, where it is kind of a strong engine of growth. These are kind of the smaller companies, the younger companies. There tends to also be a lot of M&A activity within the Russell 2000 constituents. So it's just a very exciting sector that provides different trading opportunities for customers. And then when you look at things like the geopolitical landscape and some of, the policies that may come online over the next few months or the next few years with the new administration, that's going to have an impact on the small cap sector. So it's absolutely the right time for customers to not only be looking at futures, but also at options. And that's why one of the things that we did that was unique with the product launch this past Monday is we launched futures and options both on the same day, because we want our customers and they want the risk management tools that these options and these futures provide on the Russell 2000 index. When you look at how the Russell 2000 trades, even though it trades a little bit differently than some of the other broad-based U.S. equity index benchmarks, when trading them side by side at CME, that's also an enormously powerful offering and risk management platform for our customers. When you look at some of the things with respect to margin offsets, right, where right now the Russell 2000 is always subject to change, but right now the Russell 2000 has about a 75% margin offset against the S&P 500, about 70% for the NASDAQ and Dow, and 75% against the S&P 400, the mid-cap index. So these are great things for our customers to not only trade the Russell on its own, but to start trading and spreading it against other indices as well. So it's a fantastic time, and our customers have responded positively, and we're excited to see how this product grows now that it's back at CME.
And Nick, I know you've been excited to watch this one. I think you guys are just excited over there at QuickStrike to get another product to add to your platforms. I know you've been watching it pretty hot and heavy this week, so I'll let you dive into this one first. What have you been seeing out there, and what are your thoughts in general on the return of the Russell?
I think it was exciting for us as well, because this was really sort of the first, I'll use the quote, the term new, quote unquote, new product that we were just watching and anticipating and expecting to see activity right off the bat. And that would be, the data will be sucked in and utilized by the tools that we have out there. So that part of it was very exciting, because we had to do a lot of prep, a lot of pre-processing to make sure everything was in order and ready to go. So, and we were even up to like 5 minutes before the show, we were making sure that we could see all of the data in This Week in Options report, because it was not showing until we had to tweak a few things, just because of the fact that there was newness and no history and that kind of stuff. So we had to do some special stuff to get it out there, but it's out there. So we are pleased and ready to start looking at it online. I mean, I did just push something out there with the futures historical chart for the week, and it's got all the volume down below as well. So you're going to see that there was, as Tim mentioned, a majority of the volume that took place this week in the product was in the front contract future. I don't think anything had happened in the deferred contracts, but you see there was good activity, good price movement, good volume spikes on the moves up and down. So, it's acting like it's like going to a cottage that you visited as a kid, and then you're back as an adult, and you're just right back in the same place. So it looked really comfortable and traded as well in that fashion. As far as the options go, if you are following along, or you're going to go out there later on in the week, or this weekend, you're going to see that there was a pretty good amount of activity in the options as well. As Tim mentioned, there was activity in the weeklies as well as the quarterlies and the months. And the default on the report is going to show all those expirations that have activity that have open interest, right? So make sure that you click on the expirations button and select everything, and it'll automatically filter it. But you're going to see a total open interest as of yesterday of almost 800 contracts. The volume this week in the options, it was about 1,000 contracts. I think Tim would maybe have a more concrete. So far, it's been 1,000 that I'm seeing so far. I mean, and we're still open at this point, but pretty good across the board. When you get open interest in 8 new contracts right off the bat, especially when the contracts are still trading in the other place for a period of time, it's a good sign. And the fact that we saw good activity in the weeklies, which I think Tim will attest to. It's been sort of the most stellar part of the index options is the short dated options, and these have also taken the place of the serial options. So there are now longer dated weeklies that take the place of the serial options, but you're going to see, and I think you'll expect to see the same thing with the Russell, where the short dated weekly options are where a majority of the action is going to take place. So yeah, from our standpoint, it was great. It gave us an opportunity to test the system with a brand new product. Lets us see a brand new product in action. We got it integrated with CME Direct as well, so we're pushing volatilities to them. We're also you can click through from CME Direct to Quick Strike. So all of it was ready to go and integrated right on Monday. So for us, that was pretty exciting, and I think that all parties involved were pretty happy.
Yeah, Tim, give us your thoughts on that, because obviously you took the step. Usually we see people when they bring back new products, they list the underlying first. Then maybe weeks, months, sometimes years later after the underlying gets some traction, they come in and list the options. You guys decided to list them simultaneously. Walk us through why you did that. And then also, Nick broke down some of the volume you saw this week. What are your thoughts on the numbers you saw this week?
Yeah, and I think I kind of like Nick's analogy of visiting a cottage again as an adult. I might have to borrow that from him, because
that was pretty good. He's getting into this radio thing pretty good. I think I've trained him well, Tim.
Yeah, I think so. With the Russell 2000, it's not a new index. The contract traded CME previously. People are familiar with our E-mini franchise and how Globex works and how all of our products should behave and things of that nature. So it's really just about bringing a very established index and a very familiar futures product and option product back to the market. So I think that's one thing that kind of strengthened our resolve to launch options at the same time. And Nick is right. I think we're just a little over 1,000 contracts in the options that are traded so far, with a little bit of time left to go in today's trading session. And then when we look at even on the future side, it is familiar to people. So I think as of last night, just on the future side, I don't have the option number, but we've had more than 245 accounts trade the futures. And yesterday, for example, I think 10% of the futures were in the retail segment. So these are all great numbers because people already know what the index is and they're already familiar. I would say the other reason why we launched futures on the same day, we launched futures and options on the same day, is when you look at the Russell 2000 as an index, though, it does pose some different challenges when trading it. As the name would suggest, it's almost 2,000 stocks in the index. There's a lot more managing or risk managing that goes into trading that cash basket. So when you look at what is unique about options on futures is that for the Russell 2000, especially with the weeklies, where we know a tremendous amount of trading activity has migrated kind of away from the traditional quarterly expiration into the shorter dated expirations, that trading an option on a future is a seamless delta event for the in-the-money positions. You're either going to make delivery or take delivery of that future, and it's just a lot easier to take delivery of an E-mini Russell 2000 future in a option on a future as opposed to some of the other cash varietals where you'd have to manage that cash basket against the close as well. So I think just that's feedback that we got from customers, is that they like the options on future, and it's an even more powerful risk management tool on the Russell 2000, just given some of the complications and challenges that trading that cash basket can present that you avoid by taking or making delivery of the E-mini Russell 2000 future.
One other thing I noticed about the launch, I think a lot of our listeners noticed too, we got some questions on this, was just in general, maybe this is a sign of the times that we're in now, but you chose to launch pretty much exclusively on the mini, none of the big future this time. What was the thought process behind that? Is that pretty much just kind of a sign of the times of the world we're in now? Everything's pretty much minis and weeklies and things like that, and that's where the interest and the action is, even on the institutional side.
Yeah, I would agree with that. That's just kind of where the product preference has been for a few years now, and we really just want to focus on maintaining or extending the franchise value of the E-mini product that everyone is familiar with. So I think when we're looking at the contract size, being $50, we're talking about a $60,000, $70,000 contract. That's just a more attractive contract to a lot of folks, and does bridge the gap, I think, nicely between institutional and your active individual traders. So it kind of works, and it is an electronic contract. It's on Globex. It trades alongside all of our other products. So it just kind of makes it very clear if you have one product with options then on that product, it just really allows people to focus on trading that one strategy at a familiar tick size. It's a familiar notional size, and just works really well for most of our customers that are out there trading the other E-mini products. It just kind of plugs and plays very nicely.
how far we've come from the early days of Globex and so much hand-wringing about the minis and who will use it and what's it for and how does it relate to the big one and all these other issues that popped up in the early days. That's all behind us, which is, I think, a nice thing for a lot of our listeners. And it goes to show even the big institutional guys, they like the the nuance that's available from a smaller contract. They can still do size, but they can structure things a little bit differently, which is, I think, a breath of fresh air for a lot of them out there. Nick, any other thoughts here on the Russell, sir?
Yeah, I think the one thing that we probably want to mention or keep an eye on as we move forward is, let's see how the skews start to form and whether it gets close or whether it's below the S&Ps themselves. So right now it looks like the skew's not quite as intense as it is in the S&P index options, but we're on the first day. We still have a short amount of open interest and strikes that are open and to generate these vol curves. But right now it looks a little bit more subdued than the regular index. So I'll be curious just to watch those two side by side, and maybe we'll even have to do some sort of report where we can overlay those on top of each other so we can see how those start to play out and maybe have some sort of conjecture based on the fact that one is lagging the other. So that's really the one thing I wanted to mention here, and really the interesting thing will start next week when we see how the trade continues on and how the curve starts to change and what the term structure looks like, and for me, as always, what the quick skew numbers start to look like as well.
I like it. Maybe we got a new segment on our hands. We got the rent, we got crazy trades, all the other stuff people want. Maybe we got a skew battle segment. What do you think, Nick? Skew battle report. Who's winning the skew battle and what some trades?
I like it. We could have robots, all kinds of stuff like that.
Robots.
Pretty good stuff.
You got the imagery going with it already. I like it. See, you got the metaphors going, the imagery. You're on your A game today. I like it, sir. Well done, Mr. Tim. We got a lot of other products we want to hit on too. But before we do that, I want to give you another chance. Any other thoughts on Russell before we move on into all the other stuff that's been lighting it up this week?
No, I think we covered a lot of ground, and just to reiterate, we're super excited to have the contract back at CME, and we look forward to growing the open interest and growing all the product volumes as we not only welcome the Russell contract back to CME, but we also welcome our customers back into trading the Russell themselves. Where some folks have not been trading it in the past few years, and they're excited now that it's back at CME. They're going to turn on some new strategies and get back to active again. So it's a great time. It's exciting, and I can't wait to see what next week holds after a very strong and successful week one.
We're looking forward to it as well. Also looking forward to talking more Russell. Speaking of talking about more things in your neck of the woods, stay tuned, Tim. We'll be back to you in a little bit. You can join us for some fun listener questions and all sorts of other fun stuff. Tim's a brave man. He's volunteered to stay on for the whole show. But we got a lot of stuff cooking this week. Mr. Nick out there on other products. A lot of things have been lighting up. I know in particular you've been looking at the ags a lot this week. And that's another, speaking of a Russell, it's kind of another product area we don't really have a lot of time to really get an opportunity to really talk about here on the show because the ags aren't always lighting it up. But this week, kind of pick a poison, throw a dart in the ags. You saw a lot of activity, corn, wheat, and others really kind of doing some stuff out there. So should we start in the ags, Mr. Nick? And if so, I will give you pride of place this day. I'll put you in the big hosting chair today. Which product do you want to talk about first?
Oh, God, I think... I was out a couple of days, but I did watch just the craziness in the movement of the underlying itself. So, you could really pick the corn, wheat, or the beans. I know that on Twitter, most of the people were, all the memes and stuff were talking about margin calls on wheat and stuff like that. So, there was wild action across the three. But since we're a bean family, as the Pointer Sisters say back in the 80s or late 70s, early 80s. I think we go with the beans and take a look at that and see. I think that's going to basically follow through for the other two as well. So you want me to go out there and look and take a look at stuff?
I'll do it. You happen to pick the one I did not have up on my screen. Of course, I had corn ready to go, and then you throw a curveball at me for soybeans. But I can roll with the punches here, Nick. I've been doing this a little while. Let's dive into soybeans because you're right. It was an active week, and you kind of could pick your poison out here: soybeans, corn, wheat, whichever one you want. There was some action. All these people out there who are writing into our other shows, wringing their hands. Oh, where's the vol? There's no vol to be found. Where can I find some vol? You're looking at it right here in the ags. It was rocking and rolling this week. Let's start off, like I said, in the beans there. Sold off net about 10 to 20 handles, depending where we're looking out there on the old term structure. Mostly 20 handles out there in the longer term futures. About a little over about 1.25% sell off around 990 in the futures out there. And of course, surprisingly, people write in a lot, and Nick just talked about skew. Skew is different for every product, and usually a sell off in the broad indices means you get a nice little pop and vol. Sell off out here in the beans means you get a little bit of vol coming in, and pretty aggressively in the near portion of the curve, and a little bit less as you go out there. So always fascinating to watch all that. I'll let Nick get into the skew in a little bit. And if you're wondering where the action was kind of fairly evenly split. You had about 40 lion's share coming out there with about 41% in the NOV contract, 41.5% to be precise out there. And the number one strike, the hot strike with the bullet, number one trade out here for the week out here in the beans were the NOV 1100 calls. So interesting strike selection, but nonetheless, that's where the hot action was. And the action was fairly evenly broken down. The lion's share coming on Monday, almost 12,000, 11,000 and change. And the rest pretty evenly split throughout the week, 7,600 on Thursday, about 6,500 on Tuesday. Light today, about 2,500, but still 32,000. And the lion's share actually of that closing. So interesting stuff out there. A lot of back and forth and a lot of closing action on those strikes, which is kind of interesting. So the 1100 strike, clearly where the action was this week. Then after that, it's kind of a pick your poison for number two. It's kind of a 3 or 4 way tie. Let's go here to the front contract here. Let's get into the AUG. The AUG 980 put was kind of in a 4-way tie for number two with about 22,000. A lot of contracts doing 22,000 change contracts out here this week. A lot of strikes. The 980 put, though, is our top list here with about 9,400 of that 22,000 and change coming on Thursday. The rest almost evenly, exactly split throughout the week. About 5,000 of that opening. So the lion's share of that, again, opening, which is kind of interesting of that, some of that volume, at least for those big days, lion's share of those days opening. And we also saw similar volume on the 1100 calls this time out there in September. 1100 calls doing about 22,000 and change as well. About 5,500 of that coming on Wednesday, 6,500 coming on Monday, and pretty much slightly closing on the week. So a lot of back and forth on that strike. That 1100 strike, clearly a popular one pretty much across the board, no matter where you're looking. And the term structure also active out there in the Jan contract as well. Across the board, a lot of action on the 1100. That's kind of how these ags seem to line up, though, isn't it, Nick? They kind of have a couple of months that are pretty hot, and they have a couple of strikes that are really lighting it up, and the rest kind of not so much. If you are looking a little bit farther out, we also saw a little bit of action out there in the March 2018, the 1200. So if 1100 wasn't rich enough for your blood, 1200 coming in, about 2,600 of those going up this week. But it's kind of was a pick 'em week this week, Nick, in terms of you pick a product, pick a strike, and there's action, there's volatility a lot on out there. Kind of interesting that we saw the vol coming in out here this week in soybeans. I guess that shows you how elevated it was coming into this week. What are some thoughts on what we saw in the vol? What did you see in the skew, and what else caught your eye out here in the beans this week, sir?
No, I think it was a big week for event news, right? So we had the WASI report on July 12th, and I think that's where you saw your first break away from the highs. A high like 1046 half early or late Monday in the afternoon, and then we sort of approached that again before the WASI numbers got released, and then you saw the break down, and then leading into Thursday, I believe a lot of the remaining break in the futures was on change in weather report. So I think it's wetter than it was supposed to be, and then just the whole yield scenario had changed in its entirety over the course from the WASI report all the way to the new weather reports on the 13th. And you saw a little bit of recovery in the futures today. But that 1100 strike, like we've talked about before, as much as this is a very fundamental product, the corn, wheat, and beans, people still trade things very technically from a numeric standpoint when they start to look at strikes that come into play in terms of, real sorts of barriers. So it makes sense that the 1100 would be of interest when that was on the new crop option in the November, given that we started to trade up to 10.5 almost. So it doesn't surprise me. Now, as far as, but when you think of it, you have a 60-cent range in this. This is just big. And I know that we flirted with limit downs in the wheats, I believe, in wheat yesterday. So again, I as much as I was watching, I was just sort of looking for the big spikes and paying attention to what's out there in the news and what was coming through. But, obviously a lot was happening. And it seemed to me that, most of the activity that you're watching is people trading the outrights, as opposed to that's where people are talking about their positions in the outrights. I got to imagine option owners, and I don't think there's a lot of short options going into this report. So options owners had to do something, had to have some good things go their way with the movement here. As far as the skew goes, right, I think the most obvious thing that we can talk about starting, and we'll skip the August option, right, because it's only 7 days to expiration. So we look at the SEP, the ACH, and the SEP and ACH are the old crop, and the November is the new crop options. But what you saw here is you still see a pretty wide gap between the puts and the calls. The puts are cheap to the money, the calls are rich, but they definitely came in a significant amount from a quick skew standpoint. So that quick skew channel tightened quite a bit. And, after it was all said and done, you have your options, you have the volatility is in on the week, as you expect. You have rise in volatility, like you said, going into the event. And then I think it was sort of a little bit of a double whammy. I think the WASDE came out and people thought that that's where things were. And then that weather report on the heels of the WASDE, it took it down a little bit further. So I think there was support after that report. But then after the weather came out, then we saw a whole new ball game. And I think that's where a lot of tears were shed and blood was sweated over the last few days. So I don't think we can take our eyes off of it just yet. I think the weather is still going to be an issue for everybody. Not that, again, being an ag observer more than an ag, paying attention all the time. I still think that's going to be the case. And if you just looked at the wackiness of the futures over the last 2 weeks, I think that it's still going to be something you got to keep an eye on. But that was the big tell for me, was the overall change in the calls coming in and the puts. Calls cheaper, puts richer, but still calls rich. They have the money, puts cheap. You just see it in the risk reversal, and you also see it in the quick skew. So tightening channel in the quick skew, less positive in the regular risk reversal, and then overall change in volatility. So we'll see what happens going forward here, but I would expect we're going to see some good activity for the next couple of weeks.
Since we're in the ags area, let's stay on that trend really quick. We don't get to talk ags that much, so we should kind of do a deep dive. All our ag heads will be very thankful for us. It's funny, we were talking indexes earlier in the show, and I think there's actually a surprising amount of overlap between the indexes and corn trading in particular, which makes it be surprising to people. But I know a lot of groups a few years back, and then seeing a similar scenario now, when index vol is kind of hard to come by, starting to extend their operations, getting into actually the corn options over there on CME and trying to find some other products that were places they could find some reliable volume, reliable trade, and reliable volatility. And corn was the choice for a lot of them, which I think was surprising. So still seeing a lot of overlap in some of those groups between these products. When I think indices, for whatever reason, I tend to think corn as a somewhat related concept. And we did see some action out here in corn this week as well. The futures off about 15 or so handles, trading right around, depending again out here, like about 375 is where they settled out this week. Off nearly 4% on the week. So again, not a banner week for corn either. And kind of a mixed bag also from a vol perspective either as well, depending on where you're looking on the futures term structure. Some were kind of gapping, some were kind of selling off. That's kind of the nature of the beast out there in the ags, where there's a little bit more hiccupy, I think you can call it, technical term structure for a lot of the futures out there, where they have these production and harvesting cycles, and it tends to cause things to move a little bit more as opposed to in lockstep, where you see in some of the big indices and others, you see a little bit more herky-jerky movement out there in the ags. And in terms of what was lighting it up, number one strike with the bullet out here this week with the set 420s. So 420 calls. So if you're a bull out here and you're thinking some upside is due, perhaps this was your week to load up on some 420s. About nearly 40,000 of those bad boys piling in this week. About 16,000 coming in on Tuesday, 8,500 on Wednesday, and about 7,500 on Thursday. So lion's share coming in the middle of the week there. And then following on the heels of that one, Mr. Nick, we had the 390 calls out there coming. These are actually the AUGs, obviously. So again, AUGs, not the most, not about a week left to go. So there's still some meat on that bone, not a ton, but some. About 30,000 contracts out there with lion's share 20,000. One big print coming there on Thursday, with about net opening on the week of only about 2,000. So a lot of back and forth on that strike as well. Not a lot of longer term paper in these ones, or really in the weeklies out here in the corn. It's kind of on that straight up cycle, Mr. Nick, as we've seen before in the ags. What's catching your eye out here? Vol, skew, or some big prints out here in corn as well in our big ag palooza here, Mr. Nick? Remember, you're doing so well.
There you go.
There you go. Got to find that magical mute button, sir.
Unmuted. I'm Skyped in a tabbed browser, so I'm not the same situation as I am. So I apologize. Similar action that you saw in the beans, but I don't think you saw quite the reaction from a skew standpoint, right? So I believe you saw the calls come in a bit and the puts get a little bit better bid, but all in all, a pretty similar structure to the quick skew channel. As you recall, we talked last week and the week before. I thought we said when vol looked like it wasn't, that it was reasonable, or we were down near the bottom of a range. We were talking about hedged puts, and that type of thing. So those might have been a workable trade as well. But again, similar things. I think that as this weather news starts to come through, we're going to see some more activity in here as well. I don't know how much more vol is going to come in unless we just sort of trend back and forth. But we have a pretty good range here that we're trading. If I look at this, on the week, let me get to that here. We started up high and we sort of hit a good number, 404.5, and we weathered that into the WASD, and then again, same thing. We took that hit in the WASD, and then we kind of stabilized, and then we took that hit again after the weather report. So I think that what we're going to end up seeing is we see a retracement back to the post WASD levels, and maybe a trade back up to our highs again until people are really convinced that some of this weather is really going to affect the crops. So from there, if that is the case, and I believe that's, I'm just guessing that that's going to happen, then I think that we might see vol stabilize a little bit, maybe come in a bit more. But, if we see these swings, I don't know how you can really test your wherewithal and be short the volatility here just yet, especially when you see 60-cent swings in the beans and 40-cent swings in the corn. So same thing, tightening channel, the quick skew, vols in, but I think it remains to be seen until we get some more news with what's going on with the weather.
All right, we kept Tim waiting long enough. He's chomping at the bit to get some listener questions. I'm sure our listeners like to get their questions in as well. So without further ado, Mr. Nick, let's keep on rolling right on into our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
Notice that drop still has the old time, 3 p.m. Central. We'll have to update that to 1:30 p.m. Central for the new ones. Of course, welcome to the Futures Options Feedback, the portion of the show where you guys take charge with your questions, comments, insights. Once in a while, I like to turn the tables on you as well, ask you guys some questions. Like we did before the show, we asked you a little flash poll. We said there's some volatility rocking in the ags this week. Which product would you say is on your radar or perhaps in your portfolio? We gave you 3 choices with an out there at the end. We get soybeans, corn, wheat, or other. And if you pick other, you gotta give us your choice. Tim, I know you're not an ag guy, but you're a guest. I'll give you pride of place. Which product do you think is attracting our listeners the most this week? Soybeans, corn, wheat, or perhaps other?
I'll go with soybeans.
Interesting. Any reason why, or you're just like Nick, a soybean fan?
I think just because Nick maybe made me a convert after his his earlier comment.
He lured you down a dark path, sir. Okay, one vote for soybeans, Mr. Nick. What is your vote, and what do you think is winning?
You get pulled out of your little your little hovel when you have to do something. When you're used to doing something in one place, it gets a little bit more difficult. I'm gonna be honest and say I would have gone just because I was voting with my own way. I would have gone with the beans as well. But I think that based on what I saw on Twitter and all the sad faces and memes, I'm going to say people are talking about wheat the most. That's where the vote is. So we'll see.
Both of you swinging wide, missing the mark. Actually, corn lighting up the most, 40% so far in the early voting. Got a few hours left. Corn 40%, soybeans number 2, 30%, 20% for the wheat, and only 10% for others. And they didn't reply with their choices. They weren't playing by the rules. Here's a good one. This kind of gets back to what we were talking about earlier. It comes from Nicker. Nicker wants to know, which is a straight up question, which major index is the most volatile? That's an interesting question. And Tim, this kind of gets back to what I was alluding to earlier. I think one of the reasons why I think I am, and I'm sure a lot of traders out there are probably excited to see Russell come back, is just at the end of the day, structurally, small caps should be attractive from a volatility standpoint. Obviously, there are times NASDAQ, very tech heavy, that can get very volatile. We saw that a few weeks ago. S&P these days, not so much, but that's mostly large caps. But structurally, the Russell 2000 should be in that conversation. What are your thoughts on that? And do you have any other responses here for our friend Nicker?
No, I would agree with that. Where kind of like what we were saying before too is just given the structural makeup of the small cap sector and kind of the Russell 2000 being the major benchmark for the small cap stocks, I would expect it to be a little bit more volatile in terms of its price move. So I think I would agree with that sentiment. I think the other thing I would have mentioned, because when you kind of brought up the moves in the NASDAQ from a few weeks ago, I think the other thing that we continue to see in this kind of persistent low vol environment is that it doesn't take a lot to kind of get the volatility going. So I think it also will be interesting to watch, at CME now that the Russell 2000 is joining the other kind of equity index benchmarks, that when we do see those market moving events, I'm very curious to see how also the volumes react and how some of the price action reacts across kind of all the 4 major indices.
I see interesting disassociations out there with Russell, too, because a lot of the international macro things we typically associate with a lot of big volatility in the S&P doesn't really play as much on some of the small caps. So they have their own kind of rules of engagement. It makes it an interesting one to watch, an interesting beast from a volatility standpoint. Mr. Nick, you're the man who actually is the keeper of the data, so you can actually speak to this with some authority. What are your thoughts here for our friend Mr. Nicker? Wants to know which one's giving us the most bang for the buck from a vol standpoint?
Well, I'll have to get better prepared for next week in terms of looking at them side by side. But again, I just based on experience, I'm going to say that I would expect a Russell too, and we'll have a better. And I have some old Russell data that I could take a look at too, and offer that up for next week as well. I think one interesting thing that we should see coming out of QuickStrike at some point this quarter is, one product that we added, and right now it's primarily from a futures trade standpoint, is we do have the E-mini sector futures. Okay. And one very interesting thing that we noticed early on when we first put those into the system, we plotted the returns against the returns of each of them against each other, and then in comparison to the S&P, and you saw after the election in November, you saw a big divergence between tech and everything else. So I think one thing we're going to try to do is getting these underlying, or getting these sector futures and plotting the actual volatility. So then we'll at least be able to have a little bit better idea of what sections of the market are most volatile, right? Because we have the 500, and that kind of encompasses everything. But when we split out the sectors, we're going to be able to see, what sort of steady eddy and not moving too much, and which part is more reactive to the market itself and might be driving the S&P itself. But I would say the Russell, just based on my history from a trading perspective and watching the markets. But I think what we really want to start to take a look at as we break down these the E-mini S&P 500 into the sectors, we can really start to pinpoint what parts of it are more volatile, and then really have a better answer overall.
Well said, sir. Yeah, we have the data now. You must be happy to have the Russell on the Quick Strike platform now, because now you can actually crunch the numbers. We can actually get the data, give you an actual specific answer, Mr. or perhaps Mrs. Nicker. Good question. Let's go on. We got Eve 4. He's kind of, or she, following up on a question we had a few weeks ago, Nick, about gold collars. She's saying, you talked gold collars a few episodes back. Silver, though, has been selling off. Is this a good time for a silver collar? So while you were talking, Nick, I kind of just pulled up the silver, looking at an interesting week. The sell-off, not so much the sell-off this week, with the week ending up about half a point out there in the future, right on 16 handle. So it was selling off for a while. And then on the week, the futures actually up out there, which should probably surprise some folks towards the end of the week. And you can see this for yourself now, listeners. If you're listening live, you can go over to cmegroup.com/TWIFO, pull up the silver and click on the month. I picked a few months out. You can pick, usually collars are going to be probably a month or two out. So I like the nice little juicier range. I think I picked about 2 or 3 months out. But you can pick your poison of choice and click on that live link for Quick Skew. You can see this for yourself, and you'll probably see exactly what I'm seeing. Depends on where you pull it up. But yeah, this week, not so much. The collars became a little bit less favorable. If you see in that graph, what thing you want in you're setting up a collar, of course, collar buying the underlying, buying out of the money put, selling out of the money call. So you want a scenario where the puts are fairly cheap, so you can buy them for not much money, and the calls are pretty juicy, so you can sell them for a lot of money, and hopefully you can get that for even money, maybe even a credit if you set it up well. So that's a favorable setup for a collar. I'm looking here right now, and just maybe a week ago, if you had written in, I would have had a different answer, because the puts were looking much more favorable then. The puts were a little cheaper. The calls were a little bit more expensive, but now we're not seeing that so much. Interesting stuff. Looks like the puts have come up, the calls have come down. So not exactly perhaps the most favorable. Mr. Nick, you've been playing off this quick skew for a while here. What do you? We talked gold last time, obviously. What do you have to say to our friend here, Eve 4, who wants to know, should he or perhaps she be collaring up on silver right now?
Well, if you pull up the silver, well, you guys can't see the counts maturity, but I'll tweet this thing out. The puts are trading right around, I have a year's worth of data up here, and the puts are trading right around their year average from richer cheapness to the at the money. So it's basically the year average is just a little bit cheaper than the at the money. So they're pretty much fair value across the year. But there have been plenty of opportunities to do exactly what you said, Mark, here, just based on the 30-day counts maturity quick skew, where the calls did get bid and the puts did get offered quite a bit, and it's fairly regular. So when I push this out there, you'll be able to see what I mean, in that you'll see a big jump in the spread in the quick skew channel, and then you'll see it whittle back down to where it's where you can trade out of it, and then you'll see it jump out again and whittle back down, and then there's been a little bit of a period of time in November, December, January. Maybe that has something to do with the fact that it's that time of the year where it was pretty flat and not much action in terms of something interesting to do from a collar standpoint. But there have been plenty of back and forth here, which are better than they are right now. So right now, I would say they're not the greatest. The calls aren't super rich, and the puts aren't super cheap. So I might be on the sidelines for this one, just from looking at the 30-day standpoint. But I'm going to push this out right now, so you all can take a look at it yourselves.
There you go. We'll retweet it for you. And if you had written in a week or two ago, it might have been a different story right now. Yeah, it's not terrible, but it's not exactly lighting things up. Like, let's say, I think I still use that soybean example from about a year ago, a little more, where it was just such a great time to be putting on collars out there. The puts were nothing. The calls were juiced to high heaven. It was a perfect setup. So it was an attractive time for collars. We're just not seeing that in silver. That could change. Wait a week, we'll see. But right now, not so much. It's kind of just meh collar time out here. What's not meh, though, is this topic we talked about. I think it was a week or two ago, Nick. People keep writing in for this. Tim, I'm not sure if you had a chance to hear it. We had someone write in a few episodes ago asking us what we thought was the most out there, the most esoteric, the weirdest, most interesting, call it what you will, product. They said option, but it could be product out there listed on the CME platform. I know you guys have a ton of them out there. They get into the weeds on some of those platforms, sometimes quite literally. And so we had a lot of people pontificated. Nick and I had our thoughts. I think we kind of came down somewhere in like the fluid milk, dry whey kind of area, just some of the more esoteric stuff you don't really hear a lot about. People have written in with other suggestions. Eleanor here writing in, keeping the comment thread alive, say he thinks the craziest product over there at CME. She says definitely Soybean Crush, or maybe Rough Rice. What the heck are those? I maybe the names are weird to you, but those actually trade a fair amount. So maybe Mr. Nick is offended by your soybean thing. But I don't know, Tim, as our resident guest here, both from the CME and in the CME hot seat, you have a little bit more insight into this than our average guest. What would you have to say if you had to guess right now is, shall we say, the most esoteric product on the CME platform? What comes to mind for you, sir?
Well, it's interesting. I mean, I'm not sure if it's the most esoteric per se, right? But even before I joined the CME, I was always an equity index trader. I was on the sell side for a while. So I think in general, like agricultural products I find fascinating and like bewildering. I think altogether, because it's such a foreign kind of asset class for me, and to kind of deal, and they all kind of deal in like real tangible products that you can pick up, or they're that they're live animals and things like that. I'm always fascinated by it. But I was going to say rough rice only because in some of the research that I've been doing, this week around the Russell 2000, when I was looking up some of the old contract tickers, on Bloomberg and stuff like that, the old Russell used to be like RR, and I was trying to pull in some generic contracts, and by accident started pulling in rough rice contracts, and I was like, what are these things? So that'd be the one that I said I didn't even know what it was until I think about 2 or 3 days ago.
Love it. You're at the CME and you're coming down on the same tip as our listeners. 2 votes for rough rice in a week. Who would have thunk it? Nick, has your vote changed? You're still on the dry whey bandwagon.
I still think that all the milk products are pretty crazy, and only because it just still fascinates me that stuff even trades. I think that we could also talk about the cheddar market, which just went off the floor and went electronic. So people went, and the fact that there was some efforts to corner the cheddar market, which just to me just is trading plays worthy in terms of storyline. So but the milk products, and part of the reason the milk products too, I still think, is because they have there's some goofy, their vol curve is kind of strange, and then the way the delta acts inside of a certain expiration time, and I think it might even be 30 days, the delta goes like 10 to 1 or something based on how they look at it. So I think it's, for as small and concise as that market is, there's a lot of people who are brokering that and helping people hedge their risk there. So I'm going to stick to the dairy products myself, even though I'm dairy free these days, if anybody's interested.
There you go. Getting your lifestyle choices here on the program as well. I'll have you guys know I did some digging while you were talking. Rough Rice did a whopping 316 contracts this week, so perhaps not as esoteric or as exotic as perhaps we thought. The number one trade, the Nova 1340 calls, doing a whopping 95 contracts this week. So there you go. Eleanor and Tim, the Rough Rice, trading size this week. We'll wrap it up on this kind of silly note. Tim, I'm not sure if you know this, but for some reason, our listeners have kind of dubbed this show the one show on the network that's like the Bitcoin show. Apparently, they lump it in with commodities. So they've been sending in questions and comments and suggestions on all things Bitcoin to the show for the last, for a while now. And recently, a lot of them were chiming in on the news we saw about a week and a half ago for the CFTC finally approving a Bitcoin SEF effectively, so to allow effectively options trading on Bitcoin. And so a lot of people still chiming in on this one, Nick. We talked about it again, last week's show. People still have thoughts. We have Adriel Solorzano saying, what could possibly go wrong with listing all this Bitcoin? What crazy thing could happen? It's not like the product could sell off, 15 to 70 odd % in a week. Oh, wait. Yes, it can. Andrew Berdelli chiming in. He asks the question, can you short Bitcoin BTC? You can do it in some of these weird, OTC things, not on a listed real venue like CME, not yet anyway. That's where we're hoping some of these products will come into fruition soon. Maybe we'll get Tim's thoughts on that in a little bit. But hopefully sometime in the near future is when Nick and I have said many times, we'll get a nice, real listed venue, a big, actual marketplace like a Globex. You can come in and there's market makers behind it. You can actually trade this thing with some actual size and actually make, trade it like a real product. That would be kind of nice. But for now you can, but it's a kind of an esoteric product way to do it. And you got to do some size OTC. So for the average retail guy, not really. Let's see. Clarity Spring asking, again, chiming in saying, because this market needs more speculative risk regarding Bitcoin. Yeah, I'm with you there. And Summer Trader, your buddy there, Mr. Nick, asking, when will the retail platforms list Bitcoin options? My guess is never. I'm going to disagree with you on that one, just because there's so much heat on this. Everyone is asking us about this all the time. Retail brokers are not stupid. They see this. They want a product. People want to trade. So if this thing gets approved and listed and actually gets some volume, they'll post it in a heartbeat, I think. So I'd be surprised if they don't list it when all things are said and done. That's a long way around, Tim. I know it's not your domain over there. You're not in the cryptocurrency complex over there at CME, but I'm sure you're hearing a lot of interest from your many and varied customer and client base in some of these products. Do you think you foresee sometime in the future we'll be able to do what a lot of our listeners are asking about? They'll be able to come in and trade this like a real product on a real platform like a Globex. You think that's going to happen someday? Are you kind of in the camp that all these cryptocurrencies are kind of on a race to zero and they're not really real products like some others?
Well, I think it's always an interesting question. I think when you look at some of the stuff like around Bitcoin and some of the other digital currencies that are out there, I mean, it's always fascinating, right? That this is kind of some of the the personification, for lack of a better word, of some of the blockchain technology. So I think it's interesting, and like you said, there is a lot of heat on this topic. I think the challenge for any kind of product, whether you've seen it on some of the SEC's non-approval of the ETFs, or even with the announcement you're referring to, right, with the SEF coming online for the options. I think the challenge is, how do you do it in such a way, to kind of use your phrase, that you create the real product, that you create the real ecosystem for the product. And I think as an exchange operator, that's always the challenge, where something could be new and something could be very interesting. But the real test for us as we continue to look at it is whether or not kind of passes muster, so to speak, in terms of, can we offer this product in an efficient and reliable manner, or can any exchange do it? And I think that really what the question comes down to is, how do you develop the ecosystem in such a way that it does behave more like a financial instrument, as opposed to more of the digital currency now, or some of the speculative behavior that you had mentioned. I think so. Everyone's going to keep their eye on it, but I think it will be interesting to see if anyone out there in the exchange space kind of brings it into such a way that it feels and looks like a lot of the other products out there.
Mr. Nick, you get the last word on Bitcoin, at least until next week, when more people bombard us with questions and thoughts about this. What are your thoughts here, sir? Will we ever approach this future that Tim was just outlining of a real product, real infrastructure, real tradable options and futures and all that fun stuff? Mr. Nick's having technical problems. I was going to give him the last word, but it sounds like the Skype gods have said no last word for him, listeners. So instead, that means the music comes up. Mr. Nick gets the hook. I'm just kidding. We'll get him back on once he fixes up. It's just, I know how frustrating it can be, Mr. Nick, to have technical issues. It's not fun having to deal with that stuff. But that music means we come to the end of an epic journey. What a fun one it was. We kind of touched on all sorts of areas. We started off talking all things indexes and Russell. Got into a little ag palooza on all you ag guys out there who are hitting us up to say, talk more ags. You'll be happy. We talked a bunch this week. Touched on even some Bitcoin and all kinds of other things. Collars and silver, you name it. We kind of ran the gamut this week. A really fun show. Before we go, Tim, you obviously this is just your first week out there in all things Russell, but I'm sure you guys have a lot of things coming down the pipe in the index complex. What are you guys working on? Give us some hints, some teases. What can our listeners look forward to from Russell, as well as some of the other indexes in the complex there in the coming weeks and months?
Yeah, I mean, I think just for Russell is really just kind of continue promoting the growth of the product, the growth of the options, and helping customers transition their existing open interest from the existing exchange into CME. That is going to be a primary focus of us for the next few months. And we just continue to work on kind of just some additional product extensions and features on the existing indices, whether it be the E-mini S&P or the sectors, or even looking at some of our international indices like the Nikkei. So there'll be a few kind of things that come down the pike, but it's going to be more around, I would say, kind of product extensions or new kind of technological enhancements and things like that, but nothing concrete at this time, because I like to say here to my team and to see me right now, it's all things Russell all the time.
Probably take a nice little well-earned vacation, I think, for you and a lot of your team, too. This has been, I'm sure, a lot of work.
Yes, I'm looking forward to that, too, later this summer.
I'm sure your team's like, no more new stuff for a while. Leave us alone. We just did the Russell. Let us come back in a few months, then we'll talk. So maybe we'll bring you back in a few months, Tim, and we'll get to see how Russell's playing out in the marketplace, and maybe you'll have some new hints and teases for us then. How's that sound?
Sounds great.
And Mr. Nick, we'll see if we got you back, sir. Are the Skype gods smiling upon you? And if so, What do you guys got up your sleeves over there in the land of quick strike, sir?
Can you hear me?
We can hear you. They are smiling upon you.
All right. Thank you. So I was saying I had a good 10 seconds of Bitcoin stuff, but anyway, what do we got coming down the pike? More better integration with the CME Direct platform. That's going to be pretty significant this quarter, and some stuff with Russell where we'll have those indices in the pace of the roll tools, as well as a way to do a cost analysis tools with the Russell index included. So typical stuff. I think we're going to be a little slow here for July, but I think we'll start to pick up August and see some real output beginning of September. And we mentioned before, we're going to have some ways to take a look and see all the expirations very easily for the different products. So if you're looking for a new product to trade, you're going to have that opportunity as well. So that's about it from this side.
There you go. And the easiest place to check out Nick and his team's handiwork, head on over to cmegroup.com/TWIFO, TWIFO. And you too can get all those free reports you talked about. They're live during the show. They're also updating throughout the week. You just can't click on the links and see more information about a particular month and things like that. But that said, you get great stuff. So if you're listening next Tuesday or next Thursday or whatever time you actually tune into the podcast version, you too can run reports. Just play with it, change the settings if you want to see this past week so you can see exactly what Nick and I were talking about, or keep it where you are right now, or however and whatever works for your trading. And on behalf of Nick and Tim and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, sending in such great questions. Keep them coming, even the Bitcoin ones. Yeah, we'll take those too. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.